Hello. Monitoring the currency relationships in the Asian Pacific market and their effect or influences on equity markets is an important part of the Asian Pacific short-term update. Now it's a good time to step back and look at a couple of these markets to understand why. In South Korea, looking over the past year and a half, we can see that the gradual rise in the US dollar against the won was a negative for the equity markets, the Kospi 200 index. And then in October of last year, when the US dollar topped against the local currency, the equity market bottomed and has done well since. Now it appears that the dollar may be breaking out higher again against the South Korean won, and as such, we're turning more negative on the outlook, at least short term, for equity prices. Singapore, here the MSCI Singapore Index shows the same overall relationship. We see that those equities bottomed at the time that the US dollar topped versus the Singapore dollar. And here too, it looks like this correction lower in the US dollar may come to an end. But this relationship doesn't hold up across all markets, and it's important to examine them one by one. Final chart today is the Nikkei 225, and here we do see the same relationship in that a top in the US dollar in October is coincident with a low in the Nikkei. But since then, in fact, in the last few weeks, we see the Nikkei doing well while the dollar is also rising. This is not what we saw in the other two charts. But that's because the Bank of Japan is also a source of liquidity, along with the U.S. Federal Reserve. And so it's sort of that delicate relationship with the yen liquidity and the dollar liquidity and how they balance out. And we try to track that. It's not easy on the Asia Pacific short-term update. And Japan has an upcoming change in the governorship of the Bank of Japan coming up, and that may impact exchange rates across the board, and we'll be watching it closely.